Good evening, ladies and gentlemen. Today was the 28th of April, the Wednesday before the expiry, and what an interesting week it has been altogether. On Monday, we opened with a heavy downside bias in the market. All derivatives were pricing in some kind of big potential down move. And upon every single day of this week, Monday, Tuesday, Wednesday, we have gapped up and continued to move higher, leading to a lot of short covering. At the beginning of the week, the put options were priced extremely high and call options have been available dirt cheap. Despite the up move on Monday, that bias, though reduced, continued on to Tuesday, and towards the close of Tuesday as well, there was still a downside bias in the options premium. This morning again, after gapping up, once again we saw the same situation. Well, call options are not pricing in any risk at all somehow, and put options are pricing in a lot of risk. Now, this tends to be a problem if you are short on the market or you have a non-directional strategy where the IV expansion on options that are expiring the next day is still so high that it can throw your position off balance in a matter of no time. So that being the case, today I had a certain trade which I exit completely at one point due to the rate of call option expansion. Just to put it into context, the 14900 call option, which at that time was about 100 points out of the money, expanded 26 points with a 20-point spot move, which just shows you that that is IV expansion in the call option when somebody was in a huge hurry to start covering calls at all strikes. If you look back at the time frame of 12 o'clock, with hardly any move on the spot itself, there was almost doubling of all options which were 50 and 100 points out of the money. In fact, something like the 4900 call option, which was available yesterday for 5 rupees, which anyone would have thought would end out of the money, made a high today of 65 and finally closed at something like 44. So call options have not been pricing in the upside risk, and we are having this non-stop upward movement due to short covering that is getting triggered. So it was a very tricky day to manage. I took a 1% stop loss exit in between, and the plan was to not trade further anymore. But towards the close of the market around 2 o'clock, there was very good trade available when IV started to cool off. So I re-entered the trade with only half the position, and by the end of the day, have closed down something like 0.5% on the position. So overall, I think the outcome was all right, because lately we are seeing these one-way trends which can be very tricky to navigate, and the outcome could have been much worse had I not managed to exit the time that I did. And re-entry was good because it managed to give back some of the points lost. But since it was on half the position, the idea was not to make a recovery trade, because that's definitely not ever the intention behind re-entering a trade when you've already taken a stop loss. So that being the case, thank you so much for watching. I'll catch you tomorrow for the expiry trade, and have a great evening.
Want to meet like minded traders and discuss option strategies, adjustments, and more? Just type in Discuss Nifty in your Telegram search box and join the friendly trader community.
Good morning, ladies and gentlemen. Today is the 28th. It's a Wednesday, and it's one day before the expiry, weekly expiry. Actually, what will be the monthly expiry time. So that being the case, 250 points triangle is worth something like 68 points, and that is the position that we have taken today. We've gapped up. There's been very good news on financials. Bank Nifty and financials in general are benefiting immensely. Everything else more or less flat to slightly positive, be it IT or rest of the broader market. So that being the case, this is a pretty good value that we're getting for a 250 points triangle. Something like this by tomorrow's open should be worth 50 or less than 50. So that being the case, we'll keep you posted. The idea will be till about 14,800 on the upside, not going to do too much. So if we start heading towards 14,800, we'll start moving the calls to 14,900. And if we start heading on the downside and start testing what will be the day's low, we'll move the puts to 14,550. So that's the plan for now. The plan is to risk off if there is some kind of movement. Currently, our position will benefit slightly if the calls start expanding, because they've expanded quite a bit. And yeah, more or less expecting not too much movement in the day. I'm not expecting too much of a move beyond 33,000 on the bank Nifty, because there's quite a lot of calls written at that level, and you would assume something like that would be protected. So we'll keep you posted. The time is 9:30. Okay, the time is 9:43. One thing that can be made of the OI data is the broader range signified once again is always the same range, is 14,500 and 15,000. And what seems to have a lot of positional build up is the 14,600 put and the 14,800 call. So with some amount of certainty, this range of 14,600 and 14,800 can be considered the range for which expiry is set up, and the broader range of 14,500 and 15,000 can be considered with a probability which is upwards of 90%. So that's more or less what the OI data signifies. Our position is exactly the same. We haven't made any changes, and the idea will also be to not really make any changes until there is a significant reason to do that. We'll keep you posted. Time is almost 9:45. Okay, so something to note is Reliance's strength from 3 days still continues and now is heading over 2000. Bank Nifty more or less is flat from the 33,000 range. So not particularly making a move from there. And IT is on its way down after the gap down, which is why now our position, which has a slightly negative delta, because the sold call strike is only 90 points away, whereas the sold put strike is 160 points away. We're not going to do anything right now as long as Bank Nifty continues to be flat and IT continues to be weak. Not expecting too much strength in Reliance also beyond 2000. So that's the other factor. If one of these conditions changes, also we're not seeing any kind of large call unwinding at the 14,800 strike at this point of time. So that's another criteria. And pricing is also not reflecting any kind of massive unwinding. So yeah, no particular big unwinding, but some strength at the 14,600 put. So it's more or less what it seems like, 14,500 on the downside, 15,000 on the upside to be the boundaries of the expiry, and the slightly high probability boundary being 14,600, 14,800. The fact that the unwinding is not happening at 14,800 just shows that a continued upside from here is unlikely. So we're taking into consideration Bank Nifty is flat, IT is on its way down. Reliance has shown strength in the past 3 days, made a 100-point up move, but 2000 should be probably a desirable expiry spot, which is probably why the up move happened in the first place. So all that being the case, culminates into this position being pretty good value at this point of time. If you were to look at it from an expiry perspective, this position breaks even on the downside at 14,530 and on the upside at 15,920. So pretty good risk reward, good amount of premium available. The plan will be to hold this till the close of today, almost exactly as it is, as unless one of these parameters change. We'll keep you posted. Okay, so looking at the OI, the up move is being used to write a 14,800 call option and above, but also seeing very aggressive 14,700 put option being written. So that being the case, once again, the super broad range was 15,000, 14,500, the less broad range 14,800, 14,600, and now some sort of strength building up at 14,700. So that's good amount of strength in the market. There was a slight dip. Basically, we were dipping, and Reliance and Bank Nifty were flat and flat to positive, and they started dipping. So IT stopped dipping. IT more or less stopped dipping where yesterday's close was. So for now, the hypothesis of the trade to stay range bound is very much in line with the market. So we continue to hold the position. The time is 10:30. We'll keep you posted. Okay, so partly risking off the position now because we're seeing a slight up move. So what I'm doing is moving both the puts and the calls away by 50 points. Yeah. So what this does is basically gives us a flatter spread for about 40% of the position, and a slightly higher risk reward spread for 60% of the position. The time is almost 11 o'clock. Okay, so the index continues to be strong. IT might have more or less found support towards yesterday's close, and Bank Nifty continues to trend higher. Now, I don't want to get in the way of some kind of short covering, so preemptively have just closed all of the 1850 calls and sold the 14900 no calls, sorry, the 14850 calls and sold the 14900 calls. This spread gives us far more reaction time in case there's some kind of move, and overall has flattened the risk reward. The range is holding good. Our puts are 190 points away, our calls are 110. So essentially, our position becomes heavily bearish if we hold on to the calls. And in case there's a quick 20-point move that pushes us over 14800, these won't move reasonably. They will rocket to 45, 46, whereas these puts are never going to compensate for that. So that being the situation, have just risked off on the call side, and what puts that were at 14550 have moved them up, all of them up to 14600. So yes, a slight dip does benefit us, but a big up move doesn't particularly burn us, and that's more or less the idea. So I have taken off the risk as the day has gone off. We'll keep you posted. The time is 12 o'clock, so I've still got 3.5 hours left to go. Okay, some kind of massive call side IV spike with not a single point of decrease on the put side. So okay, I am more or less going to take a stop loss on today's position. So idea will be cut out, and I will trail stop loss on the puts. This is not even in conjunction to what's happening on the spot, but more or less now we'll have to set exit orders on this. So let me chart of this going. Massive call side IV spike, huge, not even correlated with the spot. If you're wondering what I'm doing, I'm just setting exit orders for this. So I will manually trail stop loss on both the puts and the long calls. So that's the idea. Immense. 14600 buy. Okay. Okay, we'll cut part of the positions. Okay, big move, absolute big move with panic of the highest order being created on the call side, but puts not coming down at all. Okay, time to get rid of these. Okay, I was under the impression that I had continued to record, but no, I didn't. So basically, here's what happened. I want to just quickly go over why I exited the entire position. Right now, the move that we saw 1255, 1220 and 1225 was basically a move of altogether 20 points. So let's see in the meantime what has happened on the 14900 call, which is the call that we were short. So 1420, yeah. So we make an up move where it's trading around 25, 26, and it rockets to 46. So just make, so it more than doubles for a 20-point move because of the kind of fear of short covering that came in. On a 20-point move, a call option which is 100 points out of the money has doubled, and it's not like today is expiry or anything. And meanwhile, we'll see what has happened to the put option. So the put option on the same time, it's gone from 31 to 29, 2 points versus 26 points, which is straight up massive expansion of fear on the call side. I mean, calls have been underpriced for a while. Yes, absolutely, no doubt about it. But it set in this kind of freak short covering move, and that absolutely blew up the calls. So at that point, puts are not decaying, calls are expanding, and this is, mind you, 1 day before expiry. The best thing to do is cut out the position, take a stop loss. I've taken a stop loss which is more or less little more than 1.2% or so. So 1.2% stop loss, which is fine. Better than to try and navigate some kind of a freak this thing. I'll quickly go over the earlier thing also, which I said. So these calls, when we exited them, if you recall, the idea was that, and these were trading at around 12:05. It was the Nifty. So Nifty at 12:05. Yeah, 12:05. Nifty is almost at, basically just few points under 14,800, and they are trading at 12:05, right? So yeah, they're trading in this range of 36, 37, 38, right? 20-point move. An 20-point move of the spot has made the calls move gain rather 27 points, 27, 28 points, which is ridiculous. Like a lot of people must be short at once. A lot of stop losses got hit. Big shots got covered at once. No idea what that is, but these things happen. And the best thing to do when such erratic things happen is just get out of the way. Yeah, but there was no, it's not like the spot moved up and that's why the options expanded. It was purely fear of expansion. And yeah, that's more or less the day. Thank you so much for watching. The idea was to take a quick stop loss and be done for the day. So I will probably catch you tomorrow when I'll be trading the expiry, and the idea behind the expiry trade also will be to be very, very, very risk off. Okay, so I had disconnected the mic, didn't realize, but basically around 2 o'clock, so you'll find this in my order book, once the IV started to cool off, re-entered a strangle position but with half the quantity. So wanted it to be easier to manage, and on that strangle managed to capture something like on this sizing something like 8 points, and yeah, that sort of has reduced the damage we have taken. The intention is not revenge trade or anything. The reason I'm doing half sizing is because I don't want to take any further risk, but at the same time don't want the opportunity to go waste. So that has more or less been it. Also, in case something starts going wrong, I can convert it to a spread and I'll be able to hold it overnight in case something goes horribly wrong. But more or less, we're into the last 30 minutes of the market. Auto square off will happen in 27, and there's not a lot. It worked out really well to re-enter, and yeah, we'll be trailing in the stop loss by about 1.5 2 points. That's the plan. So we'll keep you posted. The main criteria for re-entry was that we saw that for 14,900 calls stopped getting unwound, and the call side IV started to come down quite a bit. We'll keep you posted. About 25 minutes to go for auto square off. Okay, so some last minute re-rating of options premiums where the calls are crashing and the puts are gaining value without any particular move on the spot. Just the puts might have over deflated in all the enthusiasm of the calls expanding. Slight amount of re-rating happening, but from a strangle perspective, it continues to lose. Right now, mark-to-market stop loss is basically a point from here, and the idea will be to continue to trail with a stop loss of trailing stop loss of 1.5 from where we are. So yeah, interesting day. The calls really blew up, and it would have hurt a lot of people who were short on the market. I took stop loss as well, decided to re-enter, but only with half the quantity, and yeah, was a pretty good re-entry. Okay, the puts have now started expanding, so whatever reason, I'm just going to start exiting the position. Getting cheesed on pricing with slippage. That is expected. Okay, so that's more or less slightly more than 0.5% of damage for the day, but I think overall an alright day considering the way the calls got burned. Like we were short these calls and they were at 35, and they expanded all the way till 90 plus. Fair enough outcome. Every day seems to be a trending day lately, so this is just one phase of the market where with strategies such as triangles, which are non-directional, you have to be even more careful and get out as soon as something's going wrong. So thank you so much for watching. Have a great evening. I hope your trades are all right, and I will see you next tomorrow for the expiry trade.
Thank you for watching. Please post any questions you have in the comment section. Also, do not forget to like and share the video and subscribe to the channel. To find us on Twitter, Telegram, and Facebook, use the username NiftyBN. Also, we post some of our trades to the community tab, so do not forget to check that from time to time.